Hey everybody, welcome back. Sive Morten is here with the Forex Peace Army.com. Let's try to create the trading plan for the next week. So in general, last object that we discussed on Friday was the target around 14.13. This is intraday XOP, and actually it has been completed. So in general, we said that 114, 114.30 area. This will be destination for a week. So as usual, we prepared the weekly report where we have taken a look at the fundamental background, trying to make the forecast either for a mid-term perspective or for a long-term perspective. As usual, I will put the link on the report down below this video. Currently, market in general is entering in very interesting and thrilling period. Of course, it might sound a bit cynic on a background of the war in Iran, but just taking it a bit aside, all the military events and taking a look directly on the performance of the market, we could say that finally the ongoing events make an impact on long-term picture. So we see the big changes on the weekly chart, on the monthly chart, which led us to create new forecasts and new expectations for the perspective on the long-term charts. Currently, we think that reaching over an area between 110, 111 mostly unavoidable, as by the technical reasons, as by the fundamental events that we see. Of course, it will not happen in a blink of an eye, so it will last for weeks, even not months. But even pure technical picture suggests that it's normal. So in fact, 110 area, it's just a 30% retracement from the 119 top. It's absolutely normal reaction on a big resistance and a big target that we've got around 119. So the conflict on the Middle East has just became the triggering factor that launched the process, and we're just on the way to the target, which we will keep an eye on. Returning back to the short-term trading, here we need to take into consideration in a few important moments. First of all, the tactics. Since market stands oversold on the weekly chart, unfortunately we just can't take the short position and forget about it. We will have to follow the tactics that we were following on the gold market, but in opposite direction. If in the gold market we were buying on the dips and selling on the top, near the existed top, on the euro currency we will have to follow the opposite direction. So we will try to sell on the rallies that we should get on the daily, on intraday charts, and preferably out on existed lows, just because of the big oversold. Yes, everybody understands that market could ignore the oversold conditions right now because it's driven by the big geopolitical events. This could happen, but this is just a question of the odds. We are following the technical background. This is actually personal choice. If you would like to hold positions beyond the oversold on the big charts, it's no problem. It will be your decision. But in general, the rule of thumb or the Napoli way of the trading suggests that we should not hold the position in excess of the extreme points if it stands at the oversold, for instance. So our target will be around the current low. So for instance, if we will get the pullback next week, we're taking some position, we should be aimed to out in existence lows. So that's towards the tactics that we will follow. Now, what particular patterns we intend to keep an eye on? First of all, on the daily chart, we see that we have the background for a possible bullish stretch. Since market here also stands at oversold and at local FIB support, you could use the 50% support here based on these lows, this reaction point, or you could use this point. In this case, you will get the 618 level, but the core remains the same. So that might be the background for a pullback. But at the same time, we are not intending to trade it on the bullish side. It's not forbidden. Of course, you could try. Maybe you will even get the good result. But taking in consideration that the stretch pattern last week was totally ignored, the only thing that we've got this pullback on Monday, and then market constantly was dropping. On the weekly chart, you could see even that there was no reaction. It's just minor shadow here on a candle and collapse. This pattern will be even weaker because it stands on a daily. and we could get either no reaction, or if we will get it, we intend to use it for a short entry instead, but not for trading on long side, just because of the current situation. But once again, as I said, if you trade on very low time frames, 15-minute chart for instance, 30-minute chart, it's not forbidden to try and take the long position if you will see the good, the proper background. For example, some clear bullish patterns are forming, something like this. But this is a bit not in a row with our strategy currently. So now let's consider possible levels and patterns that might be formed. So on the full time frame chart, you could see that XOP has been completed. Now you can see a few levels that we have. Normally, when the market stands at oversold, we suggest to get a bit deeper retracement. So in normal situation, I would consider either 1570 or 1670, these two confluence levels. That seems nice, where market could reach and then start downward action. But taking in consideration all the stuff around, I think that the primary level that we should keep an eye on is the 1570 confluence, where a theoretical market could re-establish downward action in some point on the next week. We will get a lot of events on the next week. So it'll be central bank meetings, Fed Reserve, and many others. Volatility probably will increase, and well, that's the level to consider. But on Monday and Tuesday, we could start actually right from this point and from this swing. So you can see that it's rather nice. It's a good thrusting action, and it's suitable for a scalp or very short-term bread and butter sell opportunity. From that standpoint of view, we will need to wait for a bounce. Supposedly it might be even 1510. Next level will be our level that we have specified, so these two levels might be considered, and actually the level in between might be considered because it will be 50%, which our currency likes to very much. That agrees with the previous natural support area. Now it will be resistance. So an area between 1510, 1530 is the first level to watch for, because here might be the bread and butter sell. So we will start from that and then see what will happen next. Supposedly we should get, so our task actually is to get good entry opportunity on the predefined levels. I suspect that this will be somewhere around this one. 1670 is possible, but it seems in the current circumstances it's a bit too optimistic. If of course we will not get any new positive inputs on the conflict. In this case, something might change. For example, if your union will achieve some one-by-one agreement with the Iran on the passing of their ships through the Hormuz Strait, this might change the situation. But that's just, well, suggestion. We do not have this information yet. In all other conditions stands intact. If everything will not change, it seems that 1570 is the primary level to keep an eye on. So that's probably all for now. Let's see how a week will start, and then we'll make adjustment day by day as usual.